You are watching Notepad. I'm your host Ibrahim Sani. We still continue our conversation on the stock market because people are still very much interested into how they can diversify their income via investing in equities in the capital markets. Joining us for this particular interview is Ivy Ng. She is the head of Malaysia Research at CGS CIMB Securities, but the focus of this interview will be on plantations, and because of that, Ivy is also the regional plantation analyst at CGS CIMB Securities. Ivy, welcome to the show. Let's take a quick stock take into how the plantation sector has been performing.
Okay, thanks, Sunny. So basically, the plantation sector have actually done quite well this year. If you look at the CPO price that they've achieved year to date is about 2,500. That's much better than what they saw last year at about 2,100 average. So earnings-wise, plantation companies are doing much better this year. But if you look at the KL Plantation Index and you look at the share price performance of plantation, they're actually down about 8.8% year to date. This is simply because if you look at the spot CPO price today, compare them against at the start of the year, they are slightly lower. Okay, so and last year, plantation index have gone up about 12%. So we saw a bit of profit taking this year, and that's why share price have not done as well on a year-to-date basis. But earnings-wise, they'll be much better this year.
But let's take a look into the sector as a whole compared to other sectors. There's still a lot of interest in terms of investors trying to look at what is possible to be done in this sector. Is all the potential, I suppose, achievable and realized in this year for the plantation sector, or things are a little bit different because of COVID-19?
Okay, I think in terms of potential, there are some concern with regards to demand when you had the COVID situation. Sometime in February, March, you have lockdowns in many major countries, so that had affected demand. So in that sense, the demand potential is not fully realized this year due to COVID. There's also some concern over supply disruption due to lockdown in some parts of the key palm oil region, for example in Sabah. So that also perhaps have affected, in terms of planters achieving the full potential in terms of their production for this year.
Do you think that investors should give extra focus and attention towards this sector over other sectors?
We are currently neutral on this sector, so we think that investors should pay attention to this sector because prices are rising. There's also been increasing interest in this sector simply because people are concerned that supply may be disrupted. Currently, stocks are very tight. Prices are higher than historical average. So there is potential for planters to do better or much better than what market is estimate. So I think we should pay attention to the sector. It's a big sector. It accounted for roughly about 5% of the KLCI weightage. It also accounts for about 5 to 6% of our country's GDP.
We saw that spot CPO prices are around 2,800 ringgit per ton. Do you think that this is below estimates of what people think or forecast of what people think it should be? Do you feel that the price could be raised in the months to come?
Okay, I think in terms of the price achievement so far, it's actually been above some market estimates, simply because supply are tighter than expected. China is buying more than expected to stock up their reserves. So prices has actually come in much better. And also the other concern I guess people have that led to the higher price was because Indonesia's production for the first half of this year is below expectation. So our estimate suggests that perhaps Indonesia production could be down about 5% if you look at the listed plantations performances.
One thing that I probably have to ask you that we haven't discussed in getting to this interview is the very recent riots that are currently happening in Jakarta. Do you think that that has any impact into how plantation output is going to be generated out of that country?
Okay, I don't think it will have a significant impact in terms of supply coming out from Indonesia because most of the plantation areas are outside, of Jakarta. It's mostly in Kalimantan, Sumatra, so we don't think that will have a big impact on supply coming out from Indonesia.
Let's also talk about the influencing factors of the weather. Because of La Nina and El Nino, we keep on talking about this. The earth is getting hotter and warmer. Do you think that this has any impact into how we can invest in the plantation sector?
Yes, weather is actually a key factor in determining the price. So I think currently we do have a La Nina in the system. La Nina typically will bring heavier than usual rainfall to the key palm oil region. So that is good for supply going forward. Unless it causes massive flooding, then supply could be disrupted in the near term. But what La Nina does as well is that it affects the soybean crops that are being planted in North America and South America. In the past, it brought droughts to South America. So what we are seeing today is there's been some pockets of droughts and soybean prices have been going up. And palm oil is benefiting from this as a competing oil of soybean. So as a result, we are partially benefiting from the La Nina event that's ongoing at this juncture.
Okay.
So yeah, weather is generally a positive event for prices in general.
What about foreign labor? We've seen reports in the past few weeks about the suspension or the halting of importing new foreign laborers in the sector.
Yeah.
What's the story there that maybe people can understand a little bit more on the issue?
Okay, so currently I think our government have, are not issuing new foreign worker permits. So you're not able to get new foreign workers for the plantation estates. And over time, there'll be some foreign workers that are existingly working in the estates that probably will need to return to their home country for various reasons. And we are seeing these departures, but they're not being replaced by new workers due to the government ruling on foreign workers. So as a result, over time, we may see less and less workers at the estates, and this may affect harvesting activities and in turn, reduce supply that are coming out from the estates in Malaysia.
Would that eventually move towards the prices being slightly higher because the supply
so
is being constricted?
it's generally positive for prices because supply that are coming out are less than what market is expecting. But at this juncture, if you look at the production from Malaysia in the recent months, it still looks pretty good relative to historical. So we have not really seen the effect of this labor issue impacting our monthly production in the recent months.
Is this indicative or giving clues to the authorities, including that of MPIC, for instance, to, I guess, continue on with the suspension of work permit suspension?
I think what the government has said is that until the end of this year, they will stick to the suspension in foreign worker permit. We're still only perhaps just a couple of months to the end of the year. Plantation companies are still lobbying to the government, saying that it may affect productivity, it could affect the volume of production that are coming out from the estates, and therefore our exports volume to other countries, and this may affect our export revenue. So we are trying to work on the solution on this matter. So I think with a couple of months to next year, I think they'll come to some form of resolution perhaps for next year.
All right, we'll take a short break before we continue our conversation with Ivy of CGS-CIMB. Thanks for staying with us. I have with me the Regional Plantation Analyst of CGS-CIMB, the head, Ivy Ng, joining us in this conversation of trying to unearth the plantation sector. Of course, this interview is brought to you by Bursa Malaysia, and let's focus a little bit about what is your view on this sector, considering that the continued pressure from the EU is still coming strong on environmental standards. How does this impact investors looking at this sector?
Okay, some foreign investors have basically reduced their exposure to Malaysian plantation due to this issue with regards to ESG. So that has affected, I think, share price performances of planters that have heavy foreign shareholding. But I think in terms of what the industry have done to address this, I think they have done quite a bit. I think our government have introduced certification like MSPO to tackle this issue, to assure consumer of palm oil that we are producing palm oil in a sustainable manner. Large cap plantation company have joined RSPO to get their palm oil certified. At the same time, our government is also engaging EU counterparts, to address some of the concerns they may have about the sustainability issue of palm oil.
It's interesting that you point that out, because some of the large cap plantations are arguing that the Euro counterpart or the European counterparts have some sort of a misunderstanding into how the palm oil industry is behaving. Do you agree that these misunderstandings exist, the way the large cap plantations are saying?
Yeah, I think some of the large cap plantation companies have done or addressed some of these issues, but I think perhaps the Euro counterpart, some of the consumer may be asking for more, and they probably have to discuss about this to see what is actually doable and what is probably not doable in the estates. So what they've done is they engage them, they welcome them to their estates to help them better understand how palm oil is produced. So I think engagement is necessary in order to solve this issue of misunderstanding.
What about the RSPO accreditation? Do you feel that consumers, at least European consumers, have any positive reaction towards companies being RSPO certified and accredited? Do you think that that has a bearing to how they purchase palm oil products?
Yes, I think European is one of the biggest buyer perhaps for RSPO certified palm oil. So they definitely buy into the RSPO certification. And the RSPO certification actually engage all the stakeholders of palm, from NGOs to consumer of palm and so forth. So I think in terms of the sustainability standards that they apply is generally accepted by most of the stakeholders.
Let's talk about the national standard of palm oil, the Malaysia Sustainable Palm Oil Standard. Do you feel that we are, first of all, explain a little bit more about the national standard that we're talking about here.
Yeah, I think the government is obviously trying to raise the standard of practices in the palm oil companies in Malaysia, and they want to ensure that it is engaging everyone in the palm oil industry, including smallholders. So for the RSPO, perhaps the big plantation companies have the resources to get the accreditation, but may not be applied to the smallholders because they may have issues of funding to apply for the certification and so forth. So that's why the government came up with this national standards so that it's more inclusive, including the smallholders, and also to raise the bar of standard of practices of producing palm oil in Malaysia.
So what's the level of MSPO certification adherence here in this country?
I think we currently have about 80% of the estates already being certified MSPO. So the government are working on the remaining, and they hope, I think, to certify everybody by perhaps next year or the year after. This
80%, it's is this the level of achievement that the government wants to achieve?
They want 100%, I think, if possible.
All right.
So they are helping the smallholders.
Yeah, it's always the smallholders that is always we need to focus on. But considering all this in place, do you believe that exports are therefore going to increase in the near term?
Yeah, we think exports should do better next year, post-COVID, assuming COVID, could be tackled by the end of this year. So this year, I think we lost perhaps about 1 to 2 million tons of palm oil due to lockdowns in major countries due to COVID. So if next year, I think economy is expected to recover, economy is expected to reopen fully, and we should expect palm oil demand to improve in line with that. So we do expect demand to improve over the next few months. What we can expect is that we have Deepawali, we have Christmas, and next year we do have Chinese New Year. So with all these celebrations coming on over the next few months, we should see demand remain robust. Also, if you look at stock level in Malaysia, it's currently quite low at about 1.7 million tons. So that's lower than historical level of about 2 million tons at this time of the year. So there could be short covering by consumer because they're concerned that stocks are so tight, they may not get enough supply. At the same time, we do have China actually buying more palm oil than usual. That is basically to stock up their state reserves. So all these are positive factors for demand.
Fantastic. We'll take one more short break before we continue on our conversation with Ivy Ng of CGS CIMB. Thanks for staying on with me. I have with me Ivy Ng of CGS CIMB. We're talking about the plantation sector. Ivy, let's take a macro look into this whole sector. How would investors feel, you think, look at the currency fluctuations right now if they want to invest in the counters within the plantation sector?
Okay, so we basically export most of our palm oil produced, so about 90% are exported, and they're exported in US dollar currency. So generally, if you have a strong US dollar, is probably slightly negative in terms of pricing in ringgit terms. And so generally, if you have a weak ringgit situation, it's positive in terms of price in ringgit terms.
All right, let's also talk about the direction that you feel the ringgit is going in general. Do you think that because of the stability or the instability of the ringgit right now, it is a good time to invest in export markets or export sectors like plantation?
Yes, because I think you're not dependent on local policies, so you're really dependent on global economy situation, global demand, global supply. So we think that export-oriented sectors will do well in current environment.
With the current pandemic, there has been uncertainty in the palm oil market, and this is coupled with volatile prices. How would you recommend plantations to address these issues?
Yeah, so I think plantation company can consider hedging or selling forward their palm products. They can do so via forward sale, where they entered into agreement to sell to refiners or consumer at a fixed price in the future, so they can lock in the prices. They can also consider CPO future to hedge their positioning in terms of prices, or option CPO futures. Those are instruments that they could use to hedge themselves against the volatile price environment.
And that is the instruments that if you want to hedge yourself, but some investors are thinking about derivatives as well. What's your comment when investors think about this?
I think they need to obviously understand the products and see whether it meets their needs. And if they do meets their needs, then they should consider, because we do have this product available for plantation companies to
You're talking about derivatives?
Yes,
yeah.
To hedge themselves.
Do you feel that this is going to be catching on, the trend of investing through derivatives?
I think so. I think the more volatile the price outlook is, and over the past few years, you've seen prices being quite low. And if the planters are able to lock in prices at higher price level, it would definitely be beneficial for their cash flow. And if you look at the last few years, planters have not been doing so well because CPO price is at just slightly above 2,000, and the cost of production, for the industry, perhaps we estimate could be somewhere around 1,800 to 2,000. So they're barely profitable, and cash flow was negatively affected by this issue. So if they can hedge themselves when prices are high, they can lock in good prices, they can lock in good cash flows that could help them in their financial management.
Ivy, let's take a look into the budget season that we're hitting right now. What would be some of the wish lists that you think these plantation counters would have or would want? I know you can't imagine yourself in their mind, but perhaps the common themes that you've seen and heard, what do you think the companies want from this budget?
Okay, I think generally over the past few budgets, the plantation company has been asking the government to perhaps remove the windfall tax on palm oil, simply because what they're saying is that they're not generating windfall profit at this juncture, and the price threshold where the windfall tax will be imposed is actually quite low. So they are asking the government to perhaps rethink about this windfall tax. Of course, in the wish list would be to allow them to get foreign worker permit to alleviate the labor issue. And then if that is not going to be the case when it comes to mechanization as an alternative to addressing the foreign worker issue, perhaps some tax incentive to encourage them to move into mechanization and so forth. So that could be some of the wish lists that the planters will be hoping for in the upcoming budget.
Fantastic. Final question. Investors are watching this show and they want to have like a summary from the plantation sector. What would be some of your recommendations to them?
I would say that plantation companies probably have been underappreciated in recent years because of the issues with regards to ESG. Prices have not been good, but things are looking better. So I would ask people to take a closer look at them on potential trading opportunities.
Fantastic. That was my conversation with Ivy Ng. She is the Regional Plantation Analyst of CGS CIMB Securities. She's also the Head of Malaysia Research as well. There are plenty of interviews like this that can be found on our website as well as on Bursa Malaysia's website. Find out more from these kind of interviews from both sides and all the other repositories that you can get your hands on to learn more about the market and to be a better investor. If you've missed any part of this interview, just head on to Astro AWANI. Look for Notepad over there. Plenty of interviews like this can be found there as well. Remember, budget season is upon us, so be more mindful into how you invest and perhaps learn more as you get more information on this channel here at Astro AWANI. Until then, thanks very much for watching and goodbye.